As the US turns the money printers back on, how will Bitcoin respond? Last week we had price run into this falling bullish wedge formation. We'd seen a bounce from the lower trend line, but we had some fears over high inflation numbers and a shift in the expectations from interest rate pauses to continued interest rate hikes. And we were questioning whether or not this trend line was going to hold. Well, it didn't just hold. Instead, we got a very dramatic bounce as we had the news that the US had reached an agreement on lifting its debt ceiling. This basically tells us two things. Firstly, that the US isn't going to go insolvent, which is obviously good news. But secondly, that we're going to see a period of quantitative easing or money printing. Effectively, the US government has to print dollars in order to pay its debts. This is obviously very bullish news for Bitcoin, especially as we measure its value against the US dollar. So anything that's going to devalue the dollar will invariably increase the value of Bitcoin. This morning, prices rejected from the upper trend line, which we hit almost exactly yesterday. It's likely that we've seen some profit taking here, but we're also probably seeing a lack of volume in the market. So whilst we can see that the cumulative volume spiked, our actual volume didn't, mainly due to the fact simply that this happened over the weekend when volumes are low as the institutions aren't trading. As the markets in Europe and America come online today, I expect to see a big volume spike on this bullish news, which should push us up and past this trend line. One of the other things that we looked at on Friday were the moving averages. So even though this is the daily chart, I have the weekly moving averages on here. And on Friday, we pointed out that we were about to see an event called the Golden Cross, which is where the fast moving average in the green line here, that's the 20-week, would cross the slow moving average, which is the white line here, the 50-week moving average. And on the news of the debt ceiling increase, that happened yesterday. If we flick onto the weekly charts, at the back end of last week, we kind of highlighted how that this had really only happened once previously. And it happened back here, which was the 27th of March. And this Golden Cross, March 27, 2020, led to an 800% run-up in price, which took us to our all-time high. Now, we contrasted the events of the Golden Cross happening this week with it happening back in March 2020. And the primary difference was that whereas the Golden Cross happening here is a bullish technical, it didn't have the macro bullish nature that the 27th of March had in 2020. In fact, I actually looked up at exactly what was happening on the 27th of March when this happened, and I got this news story which was basically saying that this was the day that Donald Trump signed the $2 trillion coronavirus relief package, basically giving stimulus checks to all Americans and massively supporting the US economy. So on Friday, we were looking at this situation saying we've got this bullish technical, but we don't have the macro environment that we had the last time this happened, which led to this huge run-up in price. Over the weekend, though, the debt ceiling announcement effectively gives us a quantitative easing shift. So the same macroeconomic factors that were happening back here are now starting to emerge here. So not only do we have a matching technical, we also have a matching macro environment. Effectively, the government is going to start printing money in order to alleviate problems within its economy. There are obviously some differences. The high inflation environment may mean that we're getting the macro stimulus, but that we're also in a very high interest rate situation. And certainly the CME Fed tracker is currently putting about a 70% chance of a Fed hike at the next announcement. But overall, more bullish news, as it looks like our bullish technicals are now starting to be met with some bullish macro analysis. Leave any comments below and join our completely free Discord server, which is also linked below, for hundreds of free trade signals weekly. New news comes out daily, and also we do lots of long form analysis in there too. Thank you.